Hello, this is Jordan. This video is being recorded on the afternoon of Tuesday, April 13th, 2021. Thank you for joining me today. Please like, comment, and subscribe. And in this video, I am going to follow up on a video which I published last August, looking at what I consider to be some of the most important charts in the gold sector. And this video is an update. So first off, this is simple. We're just looking at GDX, GDXJ, and also SIL. And essentially, we see that if you go to the bottom, SIL, the silver stocks, have not broken out of that massive base yet. Whereas, GDX and GDXJ, of course, broke out last year. They've retested those bases. And the key question for the rest of this year is if at those two blue arrows for GDX and GDXJ. The key question is, will the miners hold those lows? If our expectations for the market are more muted and we don't see a real strong rebound until next year, then the real key is that GDX and GDXJ just continue to hold those lows, because the longer they do that, then the greater odds we have that they have successfully retested or back tested the breakout, as you can see. And so the longer that happens, the more strength that the market is building up in anticipation for an inevitable move higher. And so if they hold those lows into 2022, then I would have to say that GDX and GDXJ would inevitably be headed for a retest of those August highs next year and probably a breakthrough. And so the measured upside targets in that scenario would remain in play. And so now in the scenario where they go below the blue arrow, the support there, I don't want to speculate, and it's the end of the bull market, and they're going to be a multi-year bear market. I don't want to speculate on that here and now. I don't want to speculate on that. I don't think it's likely at this point, but that's really the key takeaway here is, and the question for the rest of the year is, will GDX and GDXJ continue to hold those lows? And so these are the ratio charts that we really have to be watching, in addition to what we saw on the last slide. So we have GDX against gold at the top, and in the middle we have GDX against the stock market, and at the bottom we have gold against the S&P 500. And so let's posit that these ratios are all going to break out next year. We're talking about what would be a multi-year breakout. If we're looking at the top, that would be a 9-year breakout. Then the middle one, that would be an 8-year breakout. And then the one at the bottom, that would be a 7-year breakout. Multi-year breakouts on that scale are extremely significant. And so far what we see is that GDX, it's holding up much better relative to gold. And then if we look at the bottom, gold against the stock market, that's the weakest. So perhaps GDX against gold, that could be the first breakout here. And I've done, in the last week or two, I've done some other videos about fundamentals and what needs to happen to trigger this move. And I will mention that the breakouts in these ratios, they'll probably coincide with, around, I'm not going to say they'll happen the same day or the same week or the same month, but generally the breakouts in these ratios will coincide with gold breaking out from its cup and handle pattern to a new all-time high. So these ratios are a must. We have to keep our eye on them. And I think, one thing I'll be watching over the coming months is at the bottom there to see if gold against the stock market, let's see if that forms a double bottom. That'd be really encouraging. If that happens, then the other ratios will probably strengthen. But as far as the short and medium term, there's still a lot of questions here as far as how the fundamentals are going to play out for precious metals. But here and now, the sector's corrected. It's hit a bottom. So we're going to see a rebound Look, inevitably over the next, I don't know if it's going to be a year, 2 years, or whatever, the sector is set up for a very explosive move to the upside. So that's what we're all waiting for. So the update on these charts, it looks to me like there's not going to be a breakout this year, but probably next year. That'd be my guess. But look, the longer it takes, the more power, the more fuel that they have built up for that inevitable breakout. And if we go back to the targets on this page, I mean, if we look at GDX, measured upside target of around 50, if you look at the GDX to gold ratio, if that breaks out and gets to 0.0335 or something like that, and you multiply that by a $3,000 gold price, I mean, that we're talking about $100 for GDX. That's double the target on the last page. And the measured upside target for gold just by itself is 3,000. If you go to the bottom there, you look at gold against the stock market, has resistance just below 0.70. So a breakout there gives you a measured upside target close to 1. And if we look at the with the stock market now, it's over, S&P's over 4,000. So what, it could go down 30% or 25%, and that would align with that ratio getting to 1 and gold going to 3,000. So just a few more thoughts there. But I'll continue to watch these charts, and who knows, maybe in the next quarter or two, I'll do another update for you. Hope you enjoyed this video. Really appreciate you following my work. You can find a lot more at TheDailyGold.com. And I thank you again. And I look forward to publishing another video update for you guys in the days and weeks ahead. Thank you.